Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Linamar stock so we can determine if it's a buy or a sell. Linamar offers leading edge technology and deep manufacturing expertise to create solutions that power vehicles, transmission systems, etc. The company is headquartered in Guelph, Ontario, Canada, and was founded in 1966. Let's get started with the model. This is a mid-cap company, $4 billion market cap. They're trading at $64 a share, and they have 61 million shares outstanding. We're going to look at the ticker that trades on the TSX. So all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow did grow a lot from 2019 to 2020, 1.1 billion. Then it dropped back to 2019 levels. Then it was really low in 2022, only 45 million. It looks like they're investing a lot back in the CapEx. Net income is a profit or loss on the income statement. It's revenue minus expenses. And that's fairly steady, around $400 million a year. It was lowest in 2020 at 279 million. Usually when a company has low net income and high free cash flow, it's due to write-offs on the income statement. An example of a write-off is an asset impairment or goodwill impairment. Revenue is a sales for the company, and that was highest in 2022 at 8 billion Canadian dollars. It was low in 2020 at 5.8 billion. When you compare 2019 to 2022, it didn't grow too much, in the single digits. Let's look at the capital structure. 4.8 billion of equity, 1.3 billion of debt. They're 79% equity, 21% debt. Their net debt is 448 million. So they have about 900 million of cash on their balance sheet. They have a WACC of 11%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 10.5 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $9.4 billion. We divide that by 61 million shares. And we get a calculated stock price of 153. They're trading at 64, so they're trading at a 58% discount. It's a really strong buy according to the model. Simply Wall Street is in the other direction as me. They're at $58. They're saying it's 12% overvalued. 5 analysts priced this stock, and the average price target is 86. They're saying it's 34% undervalued. They pay a quarterly dividend. It was 12 cents in May 2018. Now it's up to 22 cents. It's a yield of 1.4%. which is 13% of their net income. They had really low cash flow, so it's 121% of their free cash flow. This is where the stock has been trading for the last 21 years. It finally broke through $20 in 2007, and then during the Great Recession in the middle of 2009, it got really low. It looks like around $3 a share. The stock peaked in the beginning of 2015 at $90 a share. Then during COVID, it got below 30, shot right back up past 80, but in the past year the stock has been averaging in the 60s. There are 50 companies in the same industry as Linamar, and they pay a higher dividend than average but lower than the median. They rank 15th in market cap. The average is 3.5 billion. They're at 4 billion. All these numbers are in Canadian dollars. They have a really good price to book, below 1. That means their equity is higher than their market cap. They have an amazing PE below 10. The average is 25, median is 18. Their price to free cash flow is pretty weak because they didn't have much free cash flow in the trailing 12 months. That's 88, the average is 39. And they have a great price of sales of 0.5. That means their revenue is double their market cap. So to summarize, I have them trading at a 58% discount. I rank their free cash flows 3 out of 10, their revenue 7 out of 10, and their ratio 7 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.